Hey, and a very good morning to you. It is Friday, January 20th, 2022, and here we are at the TriggerCharts pre-market rundown for this Friday, and it has been quite messy. I mean, the markets right now have been in an absolute disarray due to the fact that no one can figure out what the heck the Fed's going to do. Obviously, we need to keep that in our calculus when it comes to what's happening. More importantly, we have to realize that a lot of stock charts, futures, currencies, commodities, these charts are what we consider broken. If you look at the chart to the right here, right now, that we're just staring at, that we've been staring at for a while, it's the Nasdaq, the triple Qs representing the Nasdaq ETF, the Nasdaq 100. When you look at this, what we're finding is that there is a substantial amount of, well, let's say indecision as we see these lower lows right now on a daily basis, multiple times that we've seen that. And in addition to that, right, one low, two low, three lows, are we going to test that again right now? Currently trading on the low side of the morning or towards that. The Qs are down about 0.94 at 145 down. The Dow Jones down about 305. And the ES down about 41. This is after we saw some bank earnings come out today, and they looked okay. But there is a sell the news that is going on right now, in addition to the fact that we're seeing that, of course, rates have been on the rise for a bit, backing off over the last few days. Hey, before we get any further, I want to mention that there are some important disclosures that we need to talk about, of course. Investing is risky. Let's just admit that. Past performance is not a guarantee of future results, and a loss of original capital can occur on any investment that you make. Realize that. It's important. Everything that we talk about, and I want you to make sure that you understand that it is for educational purposes only. As always, use your best judgment when investing. What we're going to really talk about and focus in on, as we do each and every week, are some of the things that are in the back of the minds of investors, why markets may be moving and what is going on to really impact the overall trend. And then also, I think it bears mention that, of course, there's a lot of new things that are out there right now in a world that is very confused by the, are we now post-pandemic? I don't know. Maybe post-pandemic, in the throes of a pandemic. Something about a pandemic, people are very confused, right? Are we going to see a drop-off in consumer activity? Are we going to see an increase in loan problems for banks? Are we going to see a smooth sail from here? Are earnings going to compress? A lot of these things are really coming to bear right now, on top of the fact, really on the heels of the Fed becoming much more hawkish, saying, that inflation that we said was transitory, well, maybe not so transitory. In fact, it's not. We made a mistake. Now, what's interesting to note is we all take them at their word, right? Oh, yep, they're finally admitting they were wrong. Have we ever thought about maybe they're wrong again now? I'm kind of coming from the side that I think there is going to be a higher inflation level than we've seen, higher than 2%. I think we're starting to see a peak in that area right now due to the fact that there is this Omicron and the situation around the world that is causing more people to back off, companies to get concerned. And it is possible that while there are still massive supply chain issues, the fact remains that there is the potential for a little bit of deflation coming in the next several months. Just something to think about. Hey, the theme of this week, getting real. I mean, the moves that we've seen on a lot of stocks right now have been absolutely amazing. Some down 40, 50, 60% when we're only seeing a drop from 405 to 370, 25 points, somewhere about 6 or 7% on the Nasdaq. We're seeing obliteration in entire sectors of the market. There are some that are holding up really well. I mean, we saw the financials doing really well, real estate holding up pretty well. Utilities and some of those defensive names, of course, doing rather well. Some of the car companies like the Fords, the GMs, wow, just really doing well. So really interesting to see that. The fact of the matter is, though, that right now investors are confused. They're coming into this 2022 timeframe with the idea that, hey, maybe this time is different. Maybe the Fed is really going to ramp up the rates. And where are we going to go? Well, they're talking about 4 rate increases and dropping the bond buying. Now, what does that have to do with you and me, though? Like, I don't know, I'm not refinancing my mortgage. That's done already, so that's good. I got my job. I got my money. That's good. What does it have to do with us? What does it have to do with the markets? Well, it's a relatively simple but yet complex conversation we'll keep it on the simple side. Here's the deal. When it comes to increasing of interest rates by the Fed funds, what we call the risk-free rate of return is a calculation that's used by analysts. When analysts plug in a higher risk-free rate of return, what happens is valuations shrink. Therefore, instead of having the availability to say, hey, you know what, we can stand to a 30 multiple, 30 PE on stocks, you know what? With a higher interest rates, maybe it's only 25, 24, 22. And when you take a price and you take an earnings and you look at that and you just do a quick multiplication, again, the easy way of discussing this, it's very interesting to look at very simply. If we say they make $5 in earnings and we say, well, they're 30 times multiple, we get a number on the projection of the stock value. If we say they're making the same amount of money, but yet they have a 25 or 20 multiple, well, therefore, we see a lot less. So you got to keep that in mind and keep that into perspective with what is happening right now. There's an adjustment happening in the markets right now with the idea that we're not very sure 100% where we're going with rates. Is the Fed going to do a Volcker move where they're going to strangulate the economy to try to keep inflation down? Seems unlikely. Their goal has been many-sided. And I don't want to get into much more of this, but the bottom line is it would seem that they're kind of going to talk the talk, but maybe not necessarily walk the walk hardball. The very notion of them talking about this like they has in fact had the impact of tightening financial conditions. That's all they need to do is talk. So one of the things that I've noticed is we saw volatility, but without a major VIX move. In fact, we saw the VIX, where was it? 20, 21, 18, 20, not moving around too much. That is an interesting sign. Some of that is due to the fact that part of the market is moving lower or higher and the other part isn't. You know, we see the Dow doing really well with the Nasdaq getting crushed, therefore evening out things. I would tell you that we need to be careful and watch that. Over 22, 23, start getting a little bit nervous that there could be a lot more volatility. There was definitely a crash of the tech hopefuls, right? We saw that go on. And a lot of names we've been talking about over the last several months. The idea that that there has been the metaverse or maybe even new foundations in technology, Web 3.0, blockchain related, that stuff has really come in very significantly. And as I mentioned earlier, I do believe that inflation is going to peak or start peaking right about here and now. It seems very likely on that. And I would venture to say that if we don't stay within the, let me close this up here. This is what to do on this. If we don't see a reduction due to the fact that a lot of things are closing down, I don't think we're going to go much more outside the range. And I'll even go to 2% on the 10-year as an outside target of insanity right at this moment. Now let's follow up. Big moves off of support. We saw that during the week. That was really interesting. This is what we talked about last week, and I talked about this last Friday. I said, get ready for this. I said, there's a stealth correction happening. Get ready for a massive move off of the lows, and that happened Tuesday and Wednesday. Turned around a bit Thursday. K-Web, I talked about K-Web. I told there's kind of an interesting support level happening. I said if it could hold, it could be a signal. I bought that personally last week, got an 8% return in 2 or 3 days, dumped it, and we'll look for that to happen once again. Right now, we saw the turn on the downside did not hold on the upside initiation. Therefore, what do? We take our profits and move to the sideline. ARK smoked. Let's take a look where ARK is for the moment. ARKK. Currently trading at 70, sub 79. I mean, this has been a fall from fame. Now, I want you to look at something here. You know, while we're here, I want you to look at something. This is kind of cool. I think that's really interesting what we're going to look at right now, and I'm kind of trying to draw this. You know, I want to show you the head. That's the head right there. I want to show you, there's a couple of different ones of these in here, but there is some shoulders and some shoulders there. So, in fact, if I can go a little bit further here, we got this. That's not what I want to do. Maybe this one? That's not what I want to do. Still don't have all these drawings down. Where is my little squiggly line? It's not that one. It's not that one. Well, I don't know why it's so thick. Let's see. Oh, there we go. There? I don't know. You got this head, shoulder. What I showed you before is probably more appropriate, but these head, shoulder areas. And when you look at that, we do see that's usually a downward initiation. We did see the move further after we saw that move. We saw the fact that it did move down, right? Once again, it moved down here. So we got the head, shoulders, and then take the neckline. That's where you should have gone. Then you got this consolidation that happened between these 2 points, and it moved lower from there. Where are we going on this now? I mean, it looks like an attack of this particular name for some reason. I think a lot of people are pretty pissed off how well she did, Kathy Wood, in 2020, but I mean, 79 is pretty ugly there. Let's clear that up here. Okay, next. What do we have next? Question is, was that a fake out last week, or is this the beginning of a bottoming process? I would think that depending on what we see next week, this week we start to see some of the earnings, JP Morgan, Wells Fargo, are starting to come in, Citigroup. We have next week a lot more financials in the week following, starting to see some technology come in and move forward next week. I would think there's a really good setup into next week, option expiration, to see another bounce. I'll be honest. I mean, I'm not trying to be really bullish. I think there's a bounce in a bit of a corrective market, and that's what we're looking at right now. I think that's important. Earnings season, very important coming up. The big issue going to be whether or not we are going to see that companies are going to be able to meet analyst expectations. Analysts are looking for a 22% increase in overall earnings growth over the year ago period. Pretty substantial if you think about how much we've grown already. There's a lot of money, a lot of buying that's gone on, and a lot of companies have earnings, buying and pricing abilities, right? They could raise prices. So I don't know if markets are going to look past this one if companies do not come up to the fore and do well. I have a concern that markets may be saying, finally, you know what? We looked past it back in the days of 2020 when everybody was coming off of the lockdowns. We looked past it the next couple of quarters when companies were trying to adjust and figure out what was going on moving forward. We were able to adjust and look past it. Again, several different quarters because we think that with interest rates low, that will be okay. I don't know necessarily if companies that do not do well, that do not meet their earnings numbers and have a decent outlook are going to be able to just hold up really well, especially with the amount of movement we saw on the upside over the last year. Margins, that is going to be a key issue. Keep that somewhere on a note on your desk, on your screen. Put a sticky note up there. Do something. Margins. Look to see what companies are talking about with their margins. If we see any kind of margin contraction, that could be an issue. If we see that companies are unable to pass along any of the pricing that's gone on with this inflation, when we see that we saw some of the biggest PPI number inputs last month that just came out yesterday, that we've seen in years, when we see that 40-year high on inflationary numbers on a year-over-year basis, that is a big issue. Remember what happened 40 years ago with inflation. Volcker came in and crushed the markets. Again, I think we have a different team in there these days that have different goals. So I don't know if they're necessarily going to be that aggressive. But margins are a big issue that we need to look at. While we're here, I'll mention something. If you are not a registered user, in other words, if you are not a subscriber, still on trial or not at all on a trial or a subscriber of the TriggerCharts Commander Series, of the Aileron, of the KRI, make sure to get over to TradeStation. I put in the chat, I'll put it again for you just to make sure it's there. You can check out everything. There's a 10-day free look. Now, everybody that signs up as a new subscriber will get a special course online, 3-part. It's about upwards of 4-hour course on trading. It's an evergreen that we did some time ago, but holds up really, really well. $199 value that we are going to give you for free. So check that out. Check that link out. Okay, next thing I want to mention, and then we're going to get to a few other things. Excuse me. Make sure to put your stock symbols. We see about 3 or 4 or 5 in there right now. If you have a name that you want us to look at, make sure to put it inside of the chat right now, and we'll get to it. Economics. Well, we saw CPI. I just mentioned that. We saw the highest in 40 years. Crude inventories. Listen, I am absolutely all aflutter and flustered by the crude inventory numbers and, more importantly, the crude levels. Above 80 for crude. Have you seen natural gas? Wow. We got to put that on the list to look at today. We could do it a couple different ways. We could look at the future. We could look at the ETF The ETF's interesting. I think we'll look at the future, though, because it's probably trading 24 hours, even more wild than you can imagine with regard to how that moved. 14% up one day this week, down 11% the next day. PPI was hot. Retail sales, we're seeing that this morning come out. Actually, I didn't see the retail sales numbers come out. And the University of Michigan numbers as well were out this morning. And let's see if I can grab that really quickly, if that's coming up on my list of items here, which I don't think it is. Next week coming up, we have a short week. Of course, we know that, right? We see the housing starts are going to be there. Resale sales dropped 1.9% in December as higher prices caused consumers to curb spending. So there you go. That's a big issue. So that is, by the way, good and bad. The Fed's going to look at that as, whoa, you know what? We're also constraining the economy by talking the talk. Is that going to be a problem? We know that consumers right now are a little skittish. We know that less money is coming into the coffers due to the fact that there's less stimulus money that's being put out there. We also know that consumers did a big job of buying things ahead. They were worried about getting things for the holidays, so they bought things in the November season, late November. So maybe it's not that big of a deal, but you know what? We don't want to really choke off the economy. Housing starts next week, initial claims, existing home sales, and Philly Fed. Some of the stocks we're going to watch right here and some of the ones that you're talking about as well. We'll start off with one that somebody gave me today. Playboy. I mean, people think, what do you Playboy? What do you mean? I don't even think they make a magazine anymore. Well, they have online and all that, I guess, but they're not really doing the magazine. One of the things at the Playboy, why you saw this launch of Playboy from $10 up to $60, that was a daily chart. Let's kind of bring that over here, was due to the fact that Playboy was now considered an NFT company, that they were going to take their cover pages, maybe even their monthly magazines, put them up as NFTs and sell them as collector's items. Now, there's only a certain number of potential pictures that they have. There's a lot. But you have to wonder, is that really going to play? Anyway, the stock chart itself is looking pretty ragged, like we've seen many stock charts these days, especially those that have been in the area of NFT, metaverse, technology, et cetera. So this big move down. Starting to see some basing. Right now, which what are we at? 2220. Kind of 2220 right now. So we're getting towards that level of that break. I am concerned about this level down here. Could we get down to 15? I think pretty easily if we don't see this market starting to get a little bit more positive to those companies that are future earnings potential rather than where we are now, because they're not really doing well. So when you look at the aileron right here on the bottom, this issue right here that's really concerning me is we did see right here this really nice move to the upside that corresponded to a momentum move to the upside, holding of support right about these levels right here in the 22.5. But then we started to see that roll over and the momentum holding below zero and even ticking down a little bit. So right now we're starting to see that trend line clearly on the negative side channel, whatever you want to call it, and there's very little support till you get down to right about here where we are right now, 22.5. However, what you're talking about is a bounce play, trying to go against the grain. Interesting, but be aware that that's what you're doing with this, going against the grain. KBH yesterday had a really great day. Look at that chart. We saw a great consolidation for a while here, in and out. If you want to go back long and you want to look at this consolidation, this is a big one. And it kind of, consolidations do move above and below the line. But we saw this consolidation that was pretty heavy right there. And then we saw it peak out a few times, peak below a few times. We saw the real, I would say, indecisive move on this. No one would have called that they had such a great earnings move right here. KB has obviously done very well since the bottom, 12 to 49, a quadruple of price right here. But that's something to keep an eye on, as well as all the other home builders. Boeing has been up from the bottom, 188 to 233. There is some concept that we are breaking out of maybe a channel, and I would say maybe, it's a maybe. Channel is something like this, or I would say a trend line right about, I don't want that one. I want right about there. Trend line is right about there. We are starting to peak out and break above, and you drew another one. You'll see that you do have a channel somewhere to here. You got to pick your points of where you want it. There you go. Right about here. That's your channel, your basic channel. And you're starting to break above that level. Where do you go from there? Well, you have to really get above 233. and then you have some movement up to 241. There are orders coming in. There is some analysts are saying that we're going to return to the days of pre-pandemic pretty soon. DWAC, this is Trump's claim to fame that they're going to use the Truth Network as a social media platform, a SPAC that came in. Stock went amazingly from about 15 to about 175 in about 3 days. Now it's starting to break above here. I would watch this. Any news that comes out that is positive for this could move the stock. A lot of people who are followers of Trump are thinking, yeah, this is the play. We hate Twitter and Facebook and LinkedIn and all those other things, and they're going to come out with a social media platform that's coming out soon. Wow, this is going to be amazing. Finally, we have Truth, etc. So there's a combination of new idea of not technology, because it's definitely not new technology, new avenue for communication and social media. Something to look at, something to keep an eye on. Wow, what an unbelievable fall from fame here. What you have here is a couple of rocket ships that took off. That is, of course, this is the space SPCE. And we saw these take off dramatically. I mean, whoop, whoop, and then come down and crash to earth pretty substantially after Richard Branson and Chamath Palihapitiya decided to take out their shares. The CEO is starting to take out shares. Didn't help anybody right about here. But then we did see a successful launch. Everybody got excited. Right now, where are we? Absolutely nowhere. Miserable, absolute horrific levels overall. Not something I really find that I like so much. I find it, frankly, to be a little bit disturbing what happened with this stock. Let's see, we have Affirm, another stock that I find really interesting, that this stock is down about 2% today. It's been on a downward mission, I guess we can call it. Since the pop, we had Amazon right about here in this area that said, hey, we're going to be starting to use Affirm. Another couple of companies said, hey, we're going to use Affirm for the buy now, pay later. Then we get some roll down a bit for just a variety of reasons. And then the government says, we're thinking that we need to look into this and maybe regulate this a little bit better. Right now, Affirm is trading at $70 right about here. Let's draw that. Let's move this line right here. 70, what did I say? 70.62. So let's leave it right there. You're on some support here, and I find it an interesting area to look at. You did break down, and you did fill that gap right here. The question is, how much more is this going to move? Are we going to see a downside stroke to about 63? It's probably one of the worst charts you can see. I do think you're going to possibly see, again, another maybe head and shoulders, but you need to see this shoulder build up in this area right here. I like the stock, though. Really disturbed that it's in such bad shape. Another clear, you can see it. Look at that, head and shoulders. There's no question that you can't not notice this, right? I mean, they're all over the place. These shoulder, head, shoulder, and then the drop. We drew these lines in here right now, trading at 115 and change some time ago. There's 111, 126. The range that we could be seeing, we're seeing that the aileron is moving lower. I mean, I like the concept of this stock. It's just not playing right now. You're starting to get below important support right now, and that is an issue when it comes to the daily. It's just been, you could trade this, but on a daily basis, it's really not doing well. RH, another one falling from fame. Nobody thought this would go down from 700 down to 450. Let's weave in a couple of other stocks that you're asking me about. CRM, let's back this up a little bit here. There we go. CRM, we're seeing that the cloud stocks really caught a lot of wind into the end of the year and now start to fall. The earnings that came out and the estimates for the future, we put this line and said, if it breaks down below this line, we got an issue. Well, it did break. Where are we going? We landed right about, I'm looking on the left side of this, I'm looking over here, putting it where the support is, landed pretty much right on support to the nickel or the penny, right there. Where do we go from here? We did fill that gap. That's good news. We are seeing potentially some wishy-washy action over here after the other gap. We need to see this. This is starting to roll up. The aileron is starting to roll up. All of these indicators are available in the trading app store, by the way. So that's something to look at. And I think that that's something to consider, that when we're seeing the momentum come down here and we're seeing this not really go anywhere but holding, that's a sign that you may want to start looking at this a little more carefully. Silver, a lot of people ask for silver and gold, not going anywhere. Just, we had a couple of nice moves to the upside. 2076 was a level. We said that, hey, watch this level. You can kind of adjust it a little bit. 2067, that's where I have it. You're above that right now, 2125. You got a lot of work to get to the upside on this one, though. Somebody asked me earlier about BLDR. You're still looking pretty good with this. This is the builder's first source. We talked about this many times. Starting to roll down a little bit. Support is pretty good, relatively good. I would say at the midline is 77 and change. Currently trading is 79 and change. Watch out if you get some earnings. You're going to probably, if it doesn't do well, probably come down to the 70s, down 10% from there. Let's see what else we got. MTTR. See, no, that's not it. MTTR, stock that I've liked and I do like, and I find this is really interesting. There's a lot of application in the metaverse, in real estate. They're doing some major build-outs. What do you see again? Once again, we see the same thing. All these stocks look pretty much the same, right? A little bit maybe different than the others. So 1, 2, 3, boop. Where is that? We put that line in about, let's see, we put this line in here. This is 1470. Currently trading at 14, down a little bit below, down 12 cents today. Not terrible to start. Probably not a lot of volume traded this morning early. May see somewhere in the 1380. I like this concept. Has a good amount of support all the way through here. But man, this chart looks horrible. It's a difficult one to grab your arms around. If you want to hold this long term because you think somehow there's some value here, okay. But I got to tell you, it's very tricky to look at. Bonds are up today. Treasuries, this is the note. This is the actual yield, up a little bit today. Up 15 cents at 17.26. Went up to about 18. There's the yields, remember? So we're up a little bit right there. Natural gas, I promised you before we ended, right? I mean, look at these moves. This may not seem like a lot, from 3 to almost 5, and in one day. Currently trading down about 2.3% today. Big moves on natural gas. The VIX, currently trading at 21. I mean, we got to 34 when things got really hairy back in December. Not doing much right here. Which leads me to tell me that people are not that concerned and that worried. Roblox, another one that's pretty much has another wonky line. We talked about where we are right now, 78 and change. Currently trading right here, $80 is where we looked at, so we're a little bit off of that. Where is the KRI? Somebody's asking me real quick. KRI, and that's troubling. Market's in equilibrium. Let's look at another couple of ones that you need to know. We're seeing that the Spearmint is a negative 66, and this is still positive. The market is really wonky right now. The problem with the market is that if you looked at the Nasdaq versus the small cap versus the Dow Jones, if you will, the problem is that we're seeing that there's a substantial amount of differential, and that's what's causing a lot of the problems right now. The problem that we have right now when we look at all of this is that there are different parts of the markets that are doing well. That's why I called it a stealth correction. So when you look at what's happening with these corrections right now, it's a rolling correction, some severe through different parts of the market, and it's causing a lot of havoc for certain names. And that's why you need to keep some of these names on your list rather than looking necessarily at the market. We've talked about this. I've mentioned this 100 times, but 80% of a stock's directional move can be attributed to the market move itself. And that's something to really consider and to think about. With that, we are pretty much coming into the open of the market. Monday will be closed. We're seeing a lot of carnage out there. Not much. Everything's red on this list right here, right? Not much really doing very nicely. I would expect that we see some kind of a bounce attempt today. You have a 3-day weekend coming up. Monday's closed. Nobody knows what's going on. And there's concern that there's a lot of downside pressure right here. I don't know necessarily. I thought that after yesterday we'd see a little bit of a bounce. Today, questioning whether that's going to happen. Would expect that next week we do see some attempts at an upside move on some of these very washed out, oversold names into the options expiration, I believe, is next week. Listen, we'll be here next week. Thank you so much. Go over to the TradeStation Trading App Store. Go to TriggerCharts.com. Check out all the things. Lots of material on TriggerCharts.com. Thank you so much for being there, and I'll see you again next week.